Why, good afternoon, everyone. That was Sly and the Family Stone with Dance to the Music. So, anyway, let's see how many people are here. It says we have 7 so far, so hopefully some people come in. Sound check, can you guys hear me okay? The microphone seemed to be buzzing, so hopefully that works out. Okay, so let's have a quick recap. My video is being published as we speak for the afternoon, but we'll just do a quick recap here. We were looking at Intel and TQQQ. So let's look at Intel first. Oh, and it's moving up again. Look at this. Look at her take right off for 2622. So for Intel, what we mapped out was bullish above 25 and bearish below 2450. And this just kind of touched down the 2450 level a little bit. And then what we took off, it was just massive upthrust. Like we see this the previous day here on Friday, that might not have been a very good swing opportunity, but we came down to the 4 EMA to the penny and then had this massive volume and we made a higher high. This is kind of a piercing sort of pattern, but we do have this trend. The one thing is this trend is pretty much vertical. So this will run out of steam at some point, and then I would imagine that it would pull back. So currently, the risk in the swing is from 24.16 to the current price. So really, it's $2 in that case. We're hitting an R2 here right at lunchtime. And so we'll see. So we've had this pullback. But anyway, bullish above 25, and we had targets all the way to 28.54, which, you know, the ATR here is $1.20, right? I've got the ATR up here at the top on the daily. So we've already moved that, but we'll see. If it's strong, we would have probably taken our profit and maybe left the rest of the day for that sort of thing. Now, bullish above 25, and then we had this 26 level, then 26.21 was the R2. So we just kind of hung around here. And then now, if we're looking at this was a big 1 impulse, right? So if we're measuring this, there's a 1 in your pullback. But we had our trade mapped out, right? So if we were talking this morning about the difference between a scalp and a day trade. So if we were bullish above 25 here and we got in at 25, then we need to hang out for our first target, right? Which was 25.20, 25.50, 26, 26.20. And we could have taken a little bit of profit here. We got up to 25.80. Now this pulled back. Now if we were in it for the day, say we're in it for the day, this is our stop below our entry point, about 24.80. Once we've taken profit though, we're not going to let this go against us where it's negative on the day. So if our plan was, say, to take a quarter of the position off here or a half, then we would do that. And we leave the rest for another target, right? So if we let this candle close, and then this one came up to 25.80, and then, you know, here the high here, 25.96, that's not bad. We probably would have taken some profit there, pretty much right at the dollar level. But this pulls back, and then we've got this engulfing, right? So this actually worked out to pull back, make a higher high. Not a higher high, but we have this big impulse candle again. And now we're just at this 26.21. Now we're here. This is one of those setups that I like coming back to support, right? We've got this increasing volume. And my rule, like, so a 3-line strike, what qualifies for it is either the current candle that confirms it, or the previous one needs to have higher volume. And that's exactly what happened. Is down here, we had increasing volume, but on the downside, increasing volume, thinner candles, massive volume, super thin candle, and then a reversal here and 25.80. So this is where it's actually gearing up to make another run up. So the close of this candle is when we could probably get in with a target back up to potentially 26 or this high, right? This high right here. And we can see that we came back and we tested this R1 again, and we're pulling back. Now that it is around lunchtime, so whether you take that, now a lot of traders, if we're happy with the money we made here, like catching this run from 25 to 26.20 was a great trade. Now, do you want to mess around with it still, or do you want to go home for the day? Right? We don't want to trade when we're bored, anything like that. And so here, this is a great trade setup. There's an extra 20, 40 cents there. So if we were getting in this, these are tighter, right? Because these are actually scalps. 25.80, 26, 26.20, right? So we could have done half and half. And this can potentially break through this time. We'll see where this closes. There's 19 seconds here. This was a big, this was a massive volume here, and then a big rejection at the 26. So it could be, usually these are 15 to 25 minutes if they're going to go again. The thing is we didn't make this earlier in the day, so the chances of it getting up here later in the day are less, right? So if we hit this boom right early in the day, then, and it came back earlier, then it might be a little bit later, it might be okay. But we'll see. So now we're trading this level to level. These are scalps, or if we're staying in this for the day trade, like we were discussing, if we took half and then wherever you wanted to scale out, half, quarter, maybe, and then leave the rest for the day. If you're trading options, though, you want to get out when you're coming up to strength. So if we were getting out at, say, the 26.20 level, when this candle is a big solid green one touching this 26.20, we're getting out, right? You don't want to say, well, it might go higher. It's like, because look at these candles. This one here was another test. This one opened up thrusted. This was a big green candle again at one point, and then pulled back. And then this one seemed like it was going to be bearish, and it wasn't. And so anyway, this is now support here. This is all noise up to the 26.21 level. So we might see what's going on here. The other one we were looking at was TQQQ. And this is a great thing where, although Intel did well, and I guess some of the other, I've got some other tech stocks. So MU is up $5. So we're talking technology now. MU is up, Nvidia's up $1, Oracle's up, actually Oracle's up quite a bit, $7. PLTR is up, AMD is up, right? And if we look at, where's the QQQ? Down 32 cents. Right, the Qs are down 32 cents. But there's a lot of stocks in the Qs. So our TQQQ, although we were bullish, right, because we were looking, it's like, well, the other stocks look very similar. I'll move this up here, the previous close. It's from the other day. I'll move this up here. So this, I'm still in this trade. I've got the February 28th, 94.95 call spreads on that. So I wasn't going to take any profit. I mean, today they were up, oh, I don't know, I could have made $6 a contract, right? So $6, not like, not like 600. It was, so it was only 6 cents, right? A contract, I was up. It was a spread. So I'm looking for, I need to take some profit when we get up here, right? So we discussed that this morning as well, up to this massive level where we were rejected before. So I'm looking for like a $92 exit. And then also with it being, I've still got another 2 weeks left for this to get up here. So this can pull back a little bit, and then it can do whatever it likes. But we took Intel, and then the TQQQ, we had expected potentially that this would do the same thing as Intel, just continue to move up. but this one didn't. So we mapped it out on both sides. We were bullish above 91 and we were bearish below 90.47. So 90.47 is this R1 here. So if this, and this actually came down really hard before the open, and then it wound up doing this. So we were, when we broke the 90.47, would have been the second test potentially. This comes down 90.47, and then this came all the way down to our target. It hit a bunch of targets: 90.26, 90.12, 89.69, 89.54. Look at this, is S2 and a pivot even, but we actually came down to the 89.03 was the low on that. And then we start seeing here at the dollar level, very close to the support, but we have increasing volume, and it starts to reverse here. And then so this really was our trade on the downside. So now finding a good trade setup here could be a little bit difficult, right? I don't want to chase this. This looks like potentially a little head and shoulders forming. There's a left shoulder, there's a head. This could be a right shoulder. And then if that happens, then we might come all the way back down to this $89 level there. So in the morning, most of the trade pretty much worked out on the downside, hit all of our targets there. So that's what we have for the TQQQ. And I think I wanted to show you guys something new that I'm working on with Moby, because I noticed another print. Oh, the other thing we were looking at, I told you I was in Sophie. I got the 17-18 call spread for March 17th, and I paid 31 cents for them. If we look at Sophie here, this one actually gapped up today. I bought these on Friday, so there's still been a 3-day weekend, but it's a spread, so that's fine. And they're actually worth, the bid is 36 and the ask is 40, and I paid 31. So even at, like, it filled at 38, that's still like 25% profit. I think this one really has the chance to run, and plus it's a swing, right? So I'm not looking too much at the daily for that, but I think we can fill this gap up to 18, right? So we're getting close to 17, but I think we can get up here to 18, right? Because this is breaking. We have this sort of, what's it doing here? Where's our resistance? Right about here. And then the top. So this is kind of going sideways, but we have this low. Then we have a higher high, higher low. So this hasn't finished yet, right? We have no reason to see where this would pull back. So I'm looking for, even if this pulls back a bit, and this is a 1, a 2, a 3, 4, 5, something like that. But, you know, my maximum profit on that, you know, 31 cents that I paid, so 69 cents is my maximum profit if we were to close above $18 by February, by March. Yeah, the March expiration, so the middle of the month, around the 18th or something like that. So we've still got another 20 candles for it to get above here. So I'm okay with that, because that's my trading plan. If I was day trading this, I probably would have come in closer. I was looking for a longer term thing, but if here, what I would say is, like, I would try and estimate how many candles would it take to get up here. And I figured, well, the monthlies, if you're trading options, the monthlies can be a lot more liquid. And Sophie actually turned out that it's pretty decent on options. I think it was pretty bad before, but it seems to be all right. So we're going to try and test this liquidity thing. So there's that, and I will just let my dog. Apologies for that. I am back. Okay. So I wanted to show you a couple things that I'm working on with Moby here, and then we'll start to see where the market's at, right? Because there were some really good prints, and so something that I'm working on here, this should be out this week, I hope, is you can do custom layouts now. And so I'm in a demo. I mean, I've got a demo server that we're testing some of these features. But if I click on custom layouts, I've got this thing that says 3 charts. And I made this layout myself, right? So what's going to happen is you'll be able to have 5 different layouts where all of the components of Moby, you can link them together and do whatever you like. So here, what we've got is I've got different chart setups. I've got the 5-minute, the 15, the daily chart. I can change this. Say, for example, we want this one to be the day, and we want this one to be, say, the weekly. I can do something like that. And we can look at this. And this looks like here that on the weekly, we're testing the weekly high from back here. So we've got this massive volume. We're above the prints. So I'm hoping, I shouldn't really hope, my expectation with my trading plan is that this candle is going to close the week above here, right? And so now this says Intel, and so we can match them up. See how it's blue and it says Intel? Well, if I change this to Sophie, then all of the charts change, and it keeps it keeps these together. And here I'll have to change this to actual ticker Sophie as well. And I'm just looking for trades over 1,000. This is now a time and sales window, so you can see all of the trades coming in. I set it to a minimum of 1,000, which we'll see. So 1680 and stuff. We'll go back and look at this here. So you can actually see the trades that are coming across. So you see XADF, those are all dark pool exchanges. So it's an aggregate. So anything that goes through a dark pool exchange, it's going to show up as XADF here. And these are all getting filled between the bid and the ask. And then some of these are at the bid. And so if I just opened this up and just chose all, then we're going to see all kinds of trades come in, right? And these are the actual trade sizes. Some of the time and sales, they might have like, if it says a 1, it means 100. These are just straight up, right? So we're seeing, and then hundreds are usually lot sizes, but you can trade whatever you like. So we can see this coming in. But what we want to do is actually see if there's larger trades. If I go 10,000, we could see if there's anything coming through for 10,000. And what this will do is Moby is tracking any trade across the market over 5,000 shares for the sake of time and sales. It's not writing all of those to the database. We're tracking 50,000 shares and higher. But as far as day trading is concerned, if you see some of these trades here that are coming across that are large, 1682, 10,000, right? 1680, 1680. So here you see all of these trades, 1696, 1680. So it might be a little bit top heavy here, right? And that's important in watching that, seeing where the price action is actually taking it. So now we know here, 1680, 1680, 1690, those are big levels. 1690 is a 41,000, right? So if we, and then looking at the candles, if we break above 17, really we've got to get above 1714 here in order to go long again on this, right? And so this here, because we've pulled back, these candles here make up this wick on the daily. All of that together. So all of these together, because this was a high and it's pulled back, these make up that section of the daily chart. So I'm bullish on this at the moment because of all of the prints that have come in. And the other thing too is if we look at the block trade indicator, I was just looking, there was oh yeah, look at this. Intel, 10:24 a.m., 4 million shares, right? So if we click on Intel, that's going to take us over here. And so 25.79. And we're at 25.82. So we have new prints here. And if we're looking left, this is all resistance here. If we can close above 26.50, then game on, right? Well, we can take a good stab at it. And I think this will start filling this gap, right? This gap, hopefully, but like 80% of gaps fill, right? 80, 90% of gaps fill. And so it was severely rejected here, but this is all kind of price discovery here, recent price discovery, because this hasn't been filled. Well, it's been partly filled up to here, right? So we've had this gap down, and this has slowly been filling the gap. And so we've got a gap here from 26.50 all the way to 29. So we have a $2.50 gap that's going on here on Intel. So anybody who was swinging this, you might want to, when you see those massive prints, maybe take some profit there, because we're not entirely sure what's going on, and it looks like a double top. But out of this, we've broken out of this bearish section for a while, like this bearish sentiment over these couple months, and then we'll move higher. Oh, excellent. So, Tio, yeah, great news, sir. So Tio's saying he had a great day trade on Intel, and he's going to wait to the end of the day. Yeah, so we've all been there. End of the day. It's learning, like somebody can tell you a million times, and you got to see it. You got to see it. It's like, and I don't know, it's like, maybe it's a guy thing, but if somebody says, whatever you do, don't push that button, it's like it's an invitation to push the button. I mean, you see, all the crazy things we used to do as kids, on our BMX bikes and all of that sort of stuff, right? It's like we just need to figure it out. Yeah, that's right. That's right. So, and I've done those silly things, getting in. Oh man, this is a day. If we would have, so here, perfect example. If we would have swung this one on Friday, when it was way up here, and we got in at 25, and it closed at 23, because at some point, this was a massively green candle. And then all of a sudden, it pooped the bed, comes all the way back, hit the print, and then bounced off. And then now it's moving. But this would have been a terrible swing, because even though it worked out, right, getting in here at the top, and then it comes down and you're like, oh, wait, you got a spread or something or whatever the deal is. But now, if you just had straight calls, for example, then, and you get in here, you've already got to recoup $2 just to break even on the price action. And so I've done that. I've been impatient. I've got in at, say, 3 o'clock, or I've gotten in at minion time, and I had been told, don't do that. And so I wait till as close to the end of the day as I can. I really do, because I'll tell you, I've lost quite a bit of money doing that. And here's a double top. So when we're looking at this, and this is something that Taz teaches, is if this is a 1, we don't know how far this 1 is going to go. We've come up to a double top here. This could wind up being a cup and handle. We could pull back to the print. We could pull back to some prints here. And then we can come back again. We could gap. We could do whatever. But it's the same situation as here. If we're going to swing this at the end of the day, what's our risk? Our risk is back to the 4 EMA, $24. right? So if this closes at 26, our risk is $2 to make what? And a double top. So really, if we're swinging this, we have to decide your day trade can turn into a swing trade on that. And that can be interesting, right? Because our setups here could be this candle, could be this one in getting in. And now we're just starting to rocket. And then the risk, even if it does run, we're always managing the risk. We can't go back and say, oh, I should have done it. Because you know what happens is we're breaking our rules. And if it works 1 out of 10 times, then that means you've lost 9 trades when you shouldn't have. Right? And the couple times that it actually does gap. Because when we talked about on this on Thursday, and then this is Friday, it did exactly what we said it would. It had come back to the 4 and then bounce. So then the question would be, if it comes back here, tests the print, tests the 4, and bounces off it, increasing volume, made a new high, do you go long here? So now we're above the 4 and the 8. We're down on the day. We have a wick on both sides. This is not a 5-star trade, right? So when we have a trading plan that's written out, then it stops us from gambling. Even though this worked out, we can't say that this is going to work out every time, because Intel's been a dog for years, right? We noticed earlier how it actually got killed, but this might move up. So anyway, lots and lots of prints here, and what's above us is 3051, which is 5 million, which is a really big one. Plus this, so maybe this will be enough to get us from the 26 area. So if this is still, if they're adding to their position, like we discussed, because people will be selling here, like, because we're talking about it, right? We're talking about it, and other traders are talking about it. But when we're talking about adding to our positions, then if this is still long, then this is going to go up. This is going to go up. But remember what we looked at with a really massive print. So in the last year, if I click on shares here, the largest one was December 5th, 28 million on December 5th at $21. We're down here. So if we're $5 above this print here, and we've got 28, 7, 6 million, 6 million, 6 million, we're above all of these, all from late last year, third quarter last year into this time, then maybe it'll take off. So we've got the prints, we've got the trend, right? And we know that a big move is coming. Now, as we discussed, this might it might take a little bit of time because it's so big to move. Then what would we estimate for this? Well, if the ATR is $1, then what we could say is we could do 2.5 times, so 250. So, and if we're looking at, say, 2576, then we'd look at maybe 28, 29 calls. So we could do like a 28, 29 call spread into March or April. And if we look at that, I'll show you my, I've got interactive brokers here. This isn't a really great app. I don't find it terribly user-friendly. Oh, I've got to move it. And we're talking about Intel. I think I have it up here, Intel. And so we'll just look. So here, if we go the month, March 21st, that's 31 days out. And if we're looking at the 28 calls, oh, they don't have these. They have 26, 27, 50, 29 calls. They're 85. Oh, so these have a 1 to 2 penny spread. That's actually not bad. So we could get the 29 calls for the next month, 30 days, which is about 20 candles for 87 cents. Now, with this, there's the delta is 30 cents. And with the straight call, we're losing 2 cents a day, or almost 3 cents a day. And that makes sense. If we round this to 3 and times it by 30, that equals our price, essentially. So that means we're losing 3 cents a day. So tomorrow this will be worth 84, then 81, then 78, things like that. And these are all dynamic. They'll change as this will increase the closer that we get to the expiration date. Like this isn't linear, right? Like we were, this is like a parabolic sort of down. You know, you learned that in math class. If you take a pylon and slice it, you get that curve, and then it gets into a free fall in the last little bit. Within the last 14 days, it's just parabolic to the ground. And so here we've got a delta of 30. Now, when I'm pricing options, then, so right now the price up here is, say, let's call it 26 bucks, right? But the idea is, if we're looking at this 29, this means that if it moves $1 in our favor, it's 30 cents on top of the option price. So that means that my option price would increase by $30, by 30 cents. So now my option, instead of being 87 cents, would be $1.17. Which is not bad, right? And we've got the time decay as well, if we're just buying the straight option. Now, if it moves another $1, so if we move past the strike and we move another $1, well, what we get is we get the gamma and the delta. So we'd get the 30 cents. So we'd get our 30 cents, and then we'd get the gamma, which is another 7 cents. So we'd get the 30 cents on the first $1, 37 cents on the next $1. And if you want to know what the price of this would be right now, if it went up $1, just move $1 closer to the money on the strike, right? So this one here at 29 is 88. And then right now, if we move this up, see this? Oh, that's 29. Oh, that'd be $3 closer to the money. We don't have a 28 here. But so if we did 50 cents, this is a 27.50, then it'd be worth $1.25, right? If we were to move up $1.50, this would be $1.25 right there. And so you can just price them out just by looking. So if you want to know what yours will be worth in $1's time, just look up at the one. So if we're looking at puts, and it's like, okay, so if we're looking at puts, if we're shorting this, and it's, say we're shorting it at 26, so look at the 26 puts, they're $1.84. But if we want to say, okay, well, if it moves 50 cents in my favor, oh, this is $1, still $1.50. Okay. Anyway, you get the idea. We would go one closer to the strike price for that, and then you can actually just see. So now, having said that, I'm going to click on my strategy builder, because here our target is it 28, right? So if we looked at the 28, make this, we've only got a 29. So what we could do is we could buy this leg for $1.28, and then we could sell the 29 leg. And so the benefit here is this is giving us, we would actually pay 38 cents now. Because look, we were looking at paying 87. Oh yeah, it's gone up to 90 cents now. The 29s. But what we're going to do here is, say we bought the 27.50s, we'd have to pay $1.28 a contract. But what we're doing is, on the flip side of that, we're selling the 29s and collecting 88 cents. So we buy on the ask and we sell at the bid. So we buy here for $1.29 and we sell here and collect 88 cents. Right. And so the benefit of this is if we look at this together. And so in teaching, I've taught some options before, and people didn't understand the concept of selling a call or a put. And so essentially what you're doing is you're the one that's taking the other side of the trade. We're buying this because we're bullish. And we're selling this to somebody because somebody's bearish. So what happens is all the rules that happen with our option, meaning that if this moves up $1 here, where our option price will go up by 41 cents, our gamma, if it goes up another $1, all of this, then the theta, we're losing 3 cents a day. This is our burden for buying this. And if it goes up and we sell it and we make money, that's fine. Now, this is also, we're selling a call. And if this goes up, well, we sold it, but somebody else is making money. We took in the credit for this. We took in the 87 cents for this one. And so, but out of that, if this one moves $1, then we're on the hook for 31 cents. Right? If this moves up, we paid 87 for it, but now this is $1.18. If it goes up. And then there's the gamma, which we're responsible for. But the thing is too, is if we sell this, we're collecting this. We're collecting this time. So what winds up happening with selling a spread is because we bought this one here, this one will go up in value more than the one we sold, which means that whatever's in between 27.50 and 29 is $1.50 of the strike, to which we are only paying 38 cents. So if we pay 38 cents for this contract, our maximum profit is the distance between the strikes, $1.50, minus what we paid for it. So $1.18, $18. Is that right? $1.12. Right? So here, our 38-cent risk, because this could go to zero. So if we spend 38 cents, our maximum we could get is $1.12 back. No matter, it could go to the moon. This could go to $100. We would only have a maximum of the width of the spread, right? And so there's a benefit of doing this. One, because it's hurting us. So there's cost and benefit to it, right? What we're doing is we're playing it a little more conservative. If we just buy the call, then we're losing 3 cents a day. It can go up. If it moves $1, we get 43 cents, right? So that's good return. It's about a 25% return on that if it does all of those things. But we're buying ourselves time, because in this 31 days, if we're losing 3 cents a day, but we sold this other side here, look how the time slows down. See, we're 3.1 cents is going out. This theta is 3.1 cents as well. So essentially here, our time decay is nullified, right? Where we were actually losing $3 a day. This contract's $135, right? $1.35. We're saving almost $3 a day. We've bought ourselves 31 days. Now, the cost of that is we bought the ability to take 43 cents if it moves $1, but we've sold the ability for somebody else to collect 32 cents from us when if it moves $1. So the difference here is about 10 cents. 42 minus 32 is 10. So this is back in the napkin sort of thing. So if we have this, at 26 bucks and it moves $1, then our options price, say it moved $1 today, our options price, because we have the plus and the minus here together, is our options price would go up 10 cents today. So that means we would go from 38 cents to 48 cents. So that's about a 22-25% profit right out of the gate by doing that one contract. But remember, if it's really going to take off, we still have 31 days. We have about 20 candles for it to move upwards towards 29. We're already at 26. We're looking at this 27.50, 29. And these tend to hold their value a little bit more because there is the time component, 30 days out. So what somebody would do here, in this case, you could buy several of these. If it goes to 30, if it goes to 40 or whatever, you do have the potential to make explosive returns with just straight calls or straight puts. The thing is we're all about capital preservation. And like we looked at some of the other trades before, it's like, well, it took like 14 days to get there. You know, the minute we buy it, it pulls back and goes sideways for 2 weeks. So there is a great potential to lose on those trades as well. I like the spreads for longer term swing trading, but when I'm day trading, I prefer just doing the straight calls and straight puts on that, as long as the spread is decent, 1 to 2 cents. Because what you'll notice is if it's going in your direction, then the ask is going up, and if it's not very liquid, the bid is going down. Then they wind up spreading quite wide. And we'll just see if there's any instances of that. Yeah, as you get deeper into the money, look at this. The bid is 805, 815, 820. So the deeper in the money you are, then the wider the spread is. That's just how it works. And your delta is much higher. So when we're talking about day trading, something like this, 27.50, so this is good till the end of the week. Or no, this is good till March. So what'll happen is if I bought this one here, March 21st, even though we're in a day trade, say we're in a day trade right now for it. But what this means is, if I'm looking at my entry point, so we were bullish above 25 with a target of 25, 20, 50, 26. So what I could do is I could buy the 26. We're at 26 now, but say we went $1 out of the money. Then look at this right now. The 26s are worth $1.85. And then, so these might be up 50, 60%. But what we can tell is that when we look at this one contract, I'm just going to use this 27.50 for example. Say this was our entry point. Whatever the price of the stock is, we're buying this strike. And I more look at the delta for the strike. Because if you can get something like 40, 50 delta, well, what that means is if we get our dollar on Intel, we've made 42 cents a contract. There's minimal decay on this being 30 days out. Most we would lose in 1 day is 3 cents, $3. So when this is taking off, we're getting 42 cents. So this, if I sold it, I'm making 30% profit if it moves $1 on that. So that's the capital there. As we get closer, if we move closer to the nearest expiration, which would be Friday, would be what, the 21st or something, these would be a little bit different, and we can look at that. But here's the back of the napkin calculation, right? If I wanted to get 1 for 1, say I wanted every penny that the stock moves, I want $1 to me. Well, looking at this, what we can do is if I bought 2 of these for $262, and this is 41.9, so call it 42 cents, then that means that's 2 contracts together So that's 84 cents. So my total position of 2 contracts, every penny the stock moves is 0.8 something to me. So I'm making $8 every time the thing moves, something like that. And so here, if I bought 2 of these ones here, the 26s right now. So look, we're right at 26. We're right at the money. So options that are at the money will always be 50. And so if we bought 2 of these at $1.85, so 370, 380, 60, yeah, 370 bucks, and we have 2 of them, then every penny, this means every penny we're getting 1.08. If it moves $1, we're getting $1.08 on our trade. So if we scale out, say we have 2 contracts, it's $1.08, and if we scale out, now we're getting 54. Right? So if it moves $1, we get $54. If we have 2 contracts and it moves $1, we get $108. And that's how I do that back of the napkin. And then you can see the difference here. If we wanted to see what this would be worth from 26 to 27, like I had mentioned, we would just move it up one closer to the money, right? So if we're at 26 and we want to see this move $1 into the money, well, let's just move our strike $1 in the money. And look at this. This is 54 cents. Now this one here, the delta is 63, and this went from $1.89 to $2.40. This would be the new price. That's 50 cents, right? That's the price of this delta. And then the gamma is 8 cents. And if we did it again, then we would see this plus this on the next one. So just looking, I know it's a lot of information there, but just being able to do the back of the napkin sort of thing, and just know your times tables. We all learned that in school before there were computers and all of that sort of stuff. We used to have a times table race, 1 to 12, both sides in a square. The teacher would be throwing chocolate bars at us, whoever could get that together. So I just average it out. And so sometimes I'll trade a 38 or a 40 delta, depending on the price, because the risk here, and we're talking about risk, if we have a really high delta like this, and I have 2 of them, let's just call it, say it's an even 50. So I have 2 of them at 50 delta, then that means it's 1 for 1. Every penny is $1 to me if it goes in my direction. If I have a 25-cent stop, then I'm risking $25 total on my contract, right? So it goes actually both ways on that. And as we get further away from the strike price, if this goes against us, then the delta actually drops, right? So if this is going against us and getting away, so say this starts dropping, well, then we'd have to see what the prices would be by going the other way. And so instead of 54 and you're at 32, well, that's 20 cents there. It's going to need quite the rally to recover. So when we're talking about this sort of stuff, it's really easy to trade the stock directly. Because you can do, if you're learning, you can trade 4 shares. There's no problem with that, right? You can trade 4 shares, scale out. So even if it's $100 stock, it doesn't matter. But here, a $26 stock, you could put up $100. You could have this thing go $5 against you, and still you'd only lose $20. Right? So it's not about the money, it's about the process, right? And if you live in the US, you don't have any fees for buying and selling the actual stocks, right? So learning this part is really really important, because when we start looking at we'll see if we got a chart here. We go back to the 5-minute here. See if there's a good opportunity here. When you come up to this 26.20 and you're like, oh, I'll wait to see, right? And just like I mentioned, by showing the delta and the gamma, this starts going against you. Well, we're moving towards another strike, so we're losing we're losing the momentum on our option, which means that the delta is going down, right? And so when we come up right here, we've got a trust start. Look at this. There's a cam right at the dollar level. And when we see this and we're trading options, we got to get out. So trading options and holding them for the whole day can be difficult unless you know, if you're might not be that emotionally stable to watch it pull back. And then I didn't get out here, for example. And then now you're going to wait another hour and it's going to be less because there's time decay. There's all these sorts of things with that. So the difference is knowing that, getting out into strength. And then when it pulls back, then you can get in again and take some more profit on the way up if you like, or scale out and then leave some for break even. You know, you could get out half, or if this was your target, 25 to 26, you could take half or 3/4 out. Because look, if it was a 50 delta and you had 2 contracts or 4 contracts or whatever, or 10 or 100, you have some sort of scale opportunity. But on a dollar, every 2 contracts is $100 to you, right? So you have 8 contracts. That's $400 right there. And if you want to take like 3/4 of the way of them off, and it's like, okay, well, I'll take $300 profit. And then when it does this, maybe you can scalp it back up for the second test, right? This is the back to the 8 engulfing, have a little bit of pullback, and then in. Once we get into lunchtime, they can manipulate it because the banks and all of that, they're the ones providing the software and the liquidity and everything. They know where everybody's stops are. We will never have access to that sort of information. I don't believe there ever will be. They know where everybody's stops are. They know where they're. So when we have this, I find that you can have the best trade setups, but if they're going to fail, like say you have a candlestick pattern that works like 70-80% of the time. The times where it's going to fail the most is in low liquidity timeframes, and especially during lunch. So here, you might say, oh, this might be a good short. There's no volume. There's no volume here. And what the hell are we doing? We're going against the trend. The larger time frame is an uptrend. So we come up here, we pull back, and then so look at the range, 25.70 to 26.20. This is a 50-cent range. How do you trade this? It's not doing anything. And look at the volume now, being the middle of the day. Nothing's going on. It's made its move. So, and I'll tell you, I've lost a lot of money being bored. You know, it's like all of these lessons, I figured I would just tell you about it in case you haven't run into that yourself. I'll just share, and I know that you have to experience that yourself if you have not. So Tio says something. He put on an ACHR pre-market and got out on that first candle of the open. Going to be watching that one for something longer. Yeah. Oh yeah. So we're in the same boat there about the trading. So ACHR, this one actually came up. I think we were talking about that. When were we talking about this the other day? We spent a lot of time together. So here, 9:30. Oh, great. So you captured this. Yeah, that was a good setup. Look at this. This is kind of, this is neat. You see it kind of slinking. It's like an inchworm. That's a healthy chart pattern, right? If you see something, I've seen that sort of manipulation in crypto, like new initial coin offerings or something. You see them on the alternative exchanges. You'll see a coin that's just released. Then I learned this because my brother's heavy into crypto, and but you just wind up seeing boom, green, 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 green. That's so manipulated, right? You need these healthy pullbacks. And if you got this right at the beginning, That's absolutely phenomenal. And here, this one came back lower high, right? This is bullish engulfing. So if you're going to scalp this, right, we've got this up to 11. So this pulled back. There's support right here at 11. And then, so what's our target, right? If we were going to maybe go for 1143 again, this got out at 1133, so 3/8. This is a lower high. Not sure if that's a lower low. It's probably the same thing. Lower high, higher low, though. Lower high, higher low. If it's going to change, we've got to make a lower low. So I wouldn't be going short. This is what I wait for. This to me would be, it's not a 5-star setup for me, because although I like this 3-line strike, is it a bottom? It's a higher low. I preferentially like when we're right at support and it does it. We're coming down and it makes a lower low support and then takes off. So that's a lower high, higher low. That's not a higher high. And when we look at this to here, it's weak. There's RSI indicators and things like that, but that's actually weaker, and it's lunchtime. So this can be tricky, but if you captured that, that's absolutely brilliant, and you could stay in it. Oh, so you have a 30. Okay, so Leslie is saying, can you look at Schlumberger? I'm swing trading it, and you have a 43.44 call. So let's look at Schlumberger. And if you're swinging it, we always start with the daily. Wow. Hey, that looks neat. You have a 43.44 call. Let's see what's going on for noise previously. Okay. So we were to look at this 44. Look at this right here. This is the biggest point of rejection, right? Or the last big point of rejection. This would have been here, but we've already moved above it. So this was a point of rejection. We've got a double top here around 44 and an eighth. And then you've got all of this noise. You've got wicks and you've got red candles here. So 44 is pretty decent. So we're at 42.91. We've broken above a 1.3 million from, look at these, January 22nd, 23rd, 42. So we're above these, and we can see where this went up. It stayed above, broke below. We've come up, back to support again, back to support here again, and now we're moving up. So hopefully this makes a higher high. And we can borrow volume. So the day's not over yet, but we had increasing volume there. And this was like that Intel trade. This wasn't a really great trade because it was down on the day. It had a wick at the top. It was above the ADMA. There was increasing volume, but it only met 2 of 5 or 6 criteria. So now we've got this print here, 42.78, 1 million. So we're breaking above that. And then 43.14 is a 3.9 million from November. You just got to be careful of these ones that are here. But I would think it looks like your 43.44 call looks good. What's your expiration on that, Leslie? Is it expiring this month, or did you get the monthlies? Oh, March 14th. Oh, okay. So if we're thinking of that, so it's the 18th right now. So we've got 10 days left in February, and then we've got 14 days. So you've got 24 days. So that's probably about 18 candles. So if this can move up here, and if this can break above up to 40, you've got the 43, 44 calls. Yeah, well, you're also 8 cents from your first strike. So it's got to be up some sort of profit, I would think. How long ago did you buy it? Oh, last week. So even if you were here, um, where's the increasing volume? That's a good entry on this one. So that's a little 1, 2, 3. Yeah, it might be good. So its ATR is $1.15. We're at the ATR for the day. And we've got a little bit of noise in front of us. If you want to take some profit, you can. But it looks like it's healthy. It looks like it's doing okay. Yeah, that's up to you. Did you have a profit target when you got into the trade? Did you have a, because usually when it hits your lower strike, you would take some sort of profit. That's kind of a rule of thumb. Oh, good. You did take some profit. Okay. So, and then you've still got, like I mentioned, 14, about 18 more days for it to do something. And this one doesn't look like it's something that just goes it can go sideways. But when we see how these behave, this one tends to it tends to move kind of in a range, but here 46 to 40 essentially. But notice how it behaves with large prints, right? See this? This consolidation, and then it moved down, then it moved up. So we can look to see if there's anything above us around 44. I'm just going to click on the price. That's up at 55, and we'll go like 400,000. So 48, and then 47.82 is a big one, and 43.62 is a big one, and then 45.73, 44. That's from August. This one up here. We'll just leave that one on there. Yeah, so this is the daily. It looks like, yeah, you're right. It looks like an inverted head and shoulders. So if that's the case, here's the head, 40, the shoulder, 42.50. And then when we break that, that's 43, it's 45.50, 46. That would get us up here. That'd get us to this high, that recent high up here. So I have to see if there's news. They don't have earnings until April, so it looks good. If you've taken some profit, that's great. Yeah, I don't think I would add to it right now. I would just I'd hang on to it for a bit. I think that's excellent that you got into it last week. Well done, Leslie. Yeah, you have half. Okay. There's not much volume here today, but the volume was on Friday, and we're breaking above, and we came back and tested these massive prints, so it could go. This is just, be careful that this is all resistance around 43.20 with all of these other prints, and but it looks strong. Hopefully we can get up here 44. You'll notice a big difference when it gets to your strike, 44, and the time is coming, right? Then getting a little bit closer in time. If we stay above your strike price, then you'll have to get out before expiration, right? You don't want the day of expiration. If you're holding it the day of expiration, you've got to be very careful because you've sold one side of it. And if you're if you're in the money on the strike that you sold, it doesn't affect your P&L at all, right? But if you're in the money, say, for example, you've got a 43, 44 call, say it's sitting at 45. If you don't close out that position, and different brokers, they can do it at any time on the day of expiration. If you've sold that call, you can get assigned. And then what that means is they take that call away from you, and you have to provide 100 shares of the stock at that call price. So on the day of expiration, if you're in the money, you want to get out of that as early as possible. Usually they might start around 11 o'clock or something, but different brokers, and it's just random. If somebody wants Schlumberger at 44 and you're next on the list to get assigned, then you owe them the stock. Some brokers, what they'll do is if you just let it expire, some of them take care of it on their own. They'll just they'll cancel it out, right? Because you have a call and you have a put. When that comes through, they just they cancel each other out and you get the difference. But you'd want to be sure of that, because if you have, say, 10 contracts, you don't want to be responsible for 1,000 shares of Schlumberger and then be minus a whole bunch. That's not very good, because you would get the price that you collected for the option there, but then have to deliver the stock at the price. So that's the one catch. There's a lot of people are trading the futures and the SPX and things because there's no assignment. It's all cash settled all the time for that. So that's pretty decent. So we had that. It's just we were writing down some things this morning. We talked about ACHR. 1106 all the way up to 12. We mapped that out. Let's see. I know you mentioned, but I just wanted to see. I forgot we wrote it down. The high here was 1184. Yeah, so that's actually great. That got to 7/8. So 1186 would be 7/8. And people are getting out close to the high of the day. And then that's pulled back for some profit taking. So we could retrace back to here, to the 1027 level, maybe back to the print. And if it's gonna retrace, then as if we've got increasing volume moving higher again, then it'll take off. And then we know that if it comes down here, then it's a good longer term short on that. So we see all of those trades there. All right, excellent. Is there anything you guys wanted to discuss? It's early. We could see what's going on with the actual volume for the day. So now this switch to market volume. So what we've done with what is it? Because some platforms, they do have like a pre-market scanner. But then it actually, at 9:30, when the market opens, it just switches over to nothing. It's just defunct at the point. And so what I wanted to see is, since we're volume traders, volume and dark pool, is like, well, what's the biggest volume trades for the day, right? So if we look at Intel, previous day's volume was 225 million, but the average 90-day volume is 71 million, and today's 154. So whichever ones are green, they're higher than each other. Today's volume is greater than the average 90, but Intel's up 10%, 245. So when we were looking at this before, this ACHR, look, this is increasing volume over the previous day, and it's 50, 47. Just a little bit more than 50% more than the average volume. So that's neat. But the stocks so when we're looking at the pre-market volume, and if you're doing this on your own or whatever, you start noticing something like that SMCI, because I've been calling out trades since December 3rd. SMCI has been on the list several times. And with the concept of you can day trade it and swing trade it. When we're looking at this, and so say, for example, we're in this and we got in at, doesn't even matter, right, when we got in, but we're following a print, right? When you see something like this, increasing volume, this gapped up, so this is a morning star. That wasn't quite increasing volume. This was questionable to trade there. It was close, but we're trying to catch a little bit of a trend reversal. We have to be careful because it's in a downward trend, right? So you're going to have, looking at the bigger picture, if you're in a downward trend, there is the very strong potential of somebody to sell into strength. So when we get up here, see how this came down, selling into strength, like, but not really strong, but right here, we couldn't get above 35. This was a fake out because we came back and then it was a deep fake there. And then we came down and now we're breaking through all of these prints, but there's tons of them here. And then there was this and then that. So when we're looking at these sorts of things, then, and say we're in it, or we're looking to get in, okay, well, we can get in here, and then you have a couple options. I know some traders that actually have the long-term trade, or say long-term being days or weeks or to a specific target, but then you could still be in that trade on a spread and say we wanted to trade it the next day or the next day, but you're forced to watch it, right? So when you see something like this, say we're watching this one, and this here, we have this doji, which is like, we're not going to swing it because XYZ, it doesn't meet our criteria for a swing, but it did here, right? So this might be good. We're in it. We have a position. And you're like, well, we'll see. We're closing above this print or whatever. But the next day, look where it opened. We've got a little bit of a wick. It came down. There might have been a print there, but came almost to the close and then started moving up again, right? This is bullish because this candle here, if it was at the top, it would be technically bearish. This is in the middle of a run. So it might not be bearish, but the thing is the overall trend might be bearish. So if we draw a line here to here to here, you're like, I don't know. But now that we gapped up, came back and potentially tested the close, if we're going to look at it and we look at the pivots and things like that, we have the opportunity to day trade it, and you have the opportunity to manage your position. You can say, wow, this thing's really going to take off. I like this. And if we're waiting till the end of the day to swing this, or say you're in the trade, you're in the trade with stock or something, you might be like, I've been in this all day, I'm going to keep it. Or you've day traded it with closer to the money options. You could come up with another plan to trade it further out, right? And so just looking left, where's it going to stop? And so here, if we look at the crosshairs, we did that and then gapped above. And then we finally pulled back into a range, but the range was only 1, 2, 3 candles. And then look at this. We opened by gapping above. And when you're looking at this pre-market and you're like, wait a minute, we just gapped above, and usually there's a wick, and I don't think there was a wick. Open was 42.94, the low was 42.85. So 9 cents this wick. Pulled back, the close here, 42.28. So and the high was 43. Now, so anyway, it just wicked 9 cents and then took off and closed above more prints. So now we don't want to chase it. What we're looking for when we discover a large print, we don't want to miss the move. You don't want to trade it the day of the print, and you want to wait a couple days to see what it's going to do, right? With this, you can see it historically and go back up, to January of 2020 with all of the prints. If you want to really get into the weeds and see the structure of where they're buying and selling. So the moral of the story here is if you want to trade SMCI and say we were following it from back here, it's like, well, we could have been trading it from 29.50. You don't have to swing it. You could trade it day to day because there's all of these prints. And you see something like this, the candlestick pattern, the breaking the print. And when you look at the daily chart and it comes down and it, wonder, we'll see who else has prints just for an example. See if I can find one quickly. Because there's I like some of these scenarios. We'll switch to the 5-minute on Apple. So that's not a great example. Let's just look at the daily for a second. So this one here, so this one pushed up towards the previous day's close and pulled back on that. What I was looking for is on some of these days, if we were to trade this day, say we want to trade Apple like every day, right? This is pulled back. It's not a lower low or whatever, but this candle here, we don't know that it's going to be higher volume. We don't know anything about the candle for the day. If we're looking at it and we know that we're in the midst of all of these prints, well, this one might have a little wick on the bottom, and this is an inside day, so it opens in the middle. When it breaks the top of this candle and breaks a print, you're in. So here, 229.50, right here, we come back, we opened on a print, we break 229.50, we're in. That's a 6.0 print, or 6 million print. 228.20 is a 7 million print. And they've been holding on. And so when you break this here, then you've got a day trade up to, if you're up to the open here. Like, look, it turned out that it closed there, but I'm always looking left for the next point of resistance. If you're going up, what are you doing? Looking left. This actually up thrusted almost to a print and then came back and closed, increasing volume here in this range. The next day, we opened below, came down, tested the print again, and broke above. So when you compare this and you look at the daily and the 5-minute, when this opens, come down, tests a print, and breaks above anything, a pivot, a cam, a major level, something like that, you're in. And I was singing that song for you this morning. My friend Donda, she's always like, wait for the wick, wait for the wick. Dun, dun, dun. Right? So she, terrible singing voice, but anyway, she give it her all. Me too. And so now we can trade this. And so we have this increasing volume now. And we can say, okay, well, I'm going to swing Apple. And we talked about an Apple swing on the 13th, right? Our target was 248 on the daily chart. And so this one here, we actually moved up. The first target would have been 245, like we discussed. It was a $5 target on that. And our second target is 248 here, which is this 4 million print. So you can eliminate a lot of the stocks that you might want to trade. This gives you an opportunity to make potentially a lot more money. You can have 2 or 3 or 4 trades going on here, like not just the call spreads. You can do the same thing with you could sell the put spread and take in a credit, right? And so there is a little bit of risk with that. There's some benefits with it. You just take the credit up front, and as long as it can go up, down a little bit, or sideways, and all you're looking. So say, for example, we sold the 236 puts right here. Then all it has to do is stay above 236 for however long you sold it out for, a week, 2 weeks, 3 weeks. It just has to stay above 236. Because when we look at those options, if we come back and look at this, I'll do I have Apple up here? We'll see. Oh, GDX. Nobody likes GDX. We'll put Apple up here. So if Apple is at 243, it is now, but if we looked at 236 puts, let's go out we could 10 days, well, 3 days, they don't have these are all the 250 puts. So 236, let's see if we can do 237.50. So right now, if we sold the 237.50 puts for 3 days out, right? Because we're at 243. So that means that's 250, and then so that's $8. It'd have to come down $8 to stop us out, really. But if we sold this for right now, we would collect $50 a contract, right? And so the risk is, as long as we stay above 237.50 in the next 3 days, you keep $50 a contract, right? And so you can sell the spread, if you like, by selling one and buying the other side. So if we said, for example, that 237, 240s, let's go out, let's pick a proper trade, right? We'll rather than just arbitrarily picking something. Where did Apple go? Here it is. So what we would usually do is maybe go out 30 days, 45 days or something, and we could say, okay, we're not going to go below here, 225. Well, that's 20 points out of the way. This is 650 is the ATR. So, for it to go 3 times the ATR in this range, like straight down, I don't think that would actually happen. We'd have to be more bullish on that. But when you see some of these sorts of setups like this, we could actually sell below the print. So if we're at, for example, 228, we could sell like the 218, 217, something like that. And here, if we liked this one, we could see maybe we'll sell the 230, 220 something. So let's have a look at that. We'll come back up here. Apple. And so we'll go out 17. Well, we'll go out 10 days. We'll sell the 230s. We'll go to my strategy builder. We'll sell the 230s. And we'll buy the 237.50s. So this gets us a credit of 14 cents. That's not good. That's not good at all. So we'd have to play around with it, right? Because this is $13 out of the money. It'd have to come back $13. But remember, in this case, we're on the hook for the width of the spread. So that means it's if it goes down to 227.50, we're on the hook for $2.50 a contract, $250 a contract. I don't want to risk $15. I don't want to risk $250 to make $15. So what we would have to do is we could actually move this out and we could come closer to the money. So if I do this, and then we'll go out to the March monthlies. And so what we'll do is let's look for a delta that, well, that's in the money. Let's look for about a 30 delta here. So if we sell the 274s or sell the 235s, buy the 230s. What's this? This gets us $1 for a 5 wide. We don't like that. The rule of thumb is for credit spreads and debit spreads. For debit spreads, you want to try and keep your cost of the strikes, the cost of your trade, within a third of the width of the strike. So say, for example, it's $1 wide, right? You don't want your cost on that $1 wide to be really more than 33 cents, 1/3, right? Because what you're doing is you're risking 33 cents to make 66, right? And so if you get in too close to the money or something, it might cost you 50 or 60 cents for the spread, but your maximum that you can make is the width of the spread. So 40 cents. Nobody wants that. That's no good at all. So when we're going out these, we've got to be careful. So what a lot of people do is if they're going to do a put spread, sell one, they're going to go out more days. So if we go to say April, that's 58. Usually it's 45 days. This is the monthly. And then with these deltas here, this is 245. So we're at 245 now. And if we looked at 650 for the ATR, and we went say so $15 out of the money, it'd still be about 230, and then our delta is 23. So that's not really that great, because if we sell this and then we buy this one, this is getting us $1 for a 5 wide. We don't like it. What some people do if they have the margin for it is they might just sell this one, just like that. Just sell it and collect $335 a contract. Now, the margin required can be crazy. They don't take it, so because the thing is it could go all the way to zero, but your broker isn't going to try and take all $230 per share in collateral in your buying power. They take, there's some formula for it or whatever. I'm just trading a small account that I'm farting around with. I don't have the buying power to sell a put here. Right? Now, the benefit of doing this is taking in the $335 per contract and then just sitting on it. This is sitting on it for 2 months. So just by sitting on this, you're going to collect $340 as long as it stays above $230. And so if this moves up $1, so say we go from 243, say to 244, then you're making $24. And why you're making that is this is decreasing. The value of your put is decreasing. So you've sold it. You've given somebody a hot potato. This is decaying, but in your favor, right? If you're selling this, you've tossed them a melting ice cube. They said, I'll give you $340. And then you sell it to them because you're bullish and they're bearish. They want to buy this put to make money because they think it's going to go down. You want to sell it to them because it's going to eventually become worthless and because you think the price of the stock is going to go up. So that's why these are negative. Whoever bought this is losing 24 cents a day on that, on the price of this option. So this is 340, 350. They're losing 24 cents a day on that. And as it gets further out of the money, so say this keeps going up and up and up, this delta, right, starts dropping 24, 18, 13. And look at this. If Apple goes up $10, we can know what this will be. It'll be 230 to 220. We're just going further away, right, on this. The same distance as the stock moved. So now you could buy this back and close out the position for $1.80, but you collected $3.40. If we hit so let's look at it this way. If this hits if this went from 243 to 250, that's 7 points. And then we've got the delta is 24. So that'd be, well, it'd be almost this. You'd be in between this. But what we could do is we could do 7 times 24, but then this delta is going to increase here, and then it's going to become more and more worthless. So you're making almost $200 on that. 183.6. No, you're making about $170 profit on that just by this going up. And if it goes sideways, no big deal. You're collecting 24 cents a day, $24 per contract per day for it to do absolutely nothing. And that's the benefit of that. But with the by managing the strikes here, we can manage our risk. Because say, for example, Apple went bankrupt tomorrow and we've sold this put, and overnight the news comes out and now it's $5. Well, you're on the hook for the value of the stock. You've got to buy it at 230 to give it to somebody at 5. So you've got to take a $225 loss on the stock times the. So what people do is they cap them. We'll do this. Say we did a 10 wide. So we've sold this one and we buy this one. This is getting us $1.63. But the thing is we've capped our risk to about $8.37, right? Because we've taken in this credit, and then so as long as it stays above 230, if it breaks below 230, then we can start losing some money here. If it gets here way faster, because we have 58 days left, we have 2 months, right? And if something happens and it just absolutely tanks, then this will become more valuable quicker because we sold the closer end. And then, so this one is going to increase in value quicker than this one. So at some point, we'd have to manage the risk on that. So you could actually say, if you're looking at the chart and it's like, well, where would I short it? Right? If we came back and looked at where we were gonna short the stock, it's Intel. Yeah, well, this is it. We don't want it to come back here, right? The 230. We don't want that to happen. So that might not be a great idea on that. But just for the concept of the different ways to manage these trades, because we were talking about potentially trading the stock in multiple different ways just by following a print. If you liked Apple or you liked SMCI or PLTR or something with a massive print and you can see how it's actually behaving and you see these trade setups, then by all means, you see something like this and you're bullish, well, you can take some money by selling a credit spread, take in some money by selling the puts below this, right? Or you can, when you see something like this or the confirmation, you can go long, take some longer term calls, if that's the case, and then you can day trade it. And then because you're watching it on the daily, trading the 5-minute, but watching the daily for your longer term swing, you have other opportunities because you always see what the stock is doing. So there's that opportunity as well. So anyway, okay. Is there anything you guys wanted to talk about? It's only 1:30, so I'm not sure about maybe looking at some swings here. We looked at Intel, SMCI has been big. These tech ones, AI stuff, RGTI is a computer thing. So these ones are down a little bit. QBTS is quantum computing. Sophie is up 50 cents. We like that. BABA is up it's up $2. It's over its average volume. And WBA is what? Oh, Walgreens. SLV is silver. This is Silver Trust. So we'll see what Baba has to say for itself. Eek. This one might be finding a top. We draw a line 1, 2, maybe 135. We'll see if there's any new prints. Really. Statting those there. So this is looking a little bit extended. So even if this does take off, this kind of needed to be confirmed. This was high volume, and it's a hammer at the top. That's technically bearish. It moved a little bit higher. So we'll see. It could start this consolidation thing. I'm not too excited about getting into a trade like that, but like I mentioned before, when we start looking at these stocks, there's other opportunities to get in. Increasing volume, new high there. This pulled back, there's another entry, increasing volume, right? And then, but we can go out a few extra days for these if we're trading options. And then, because those are great for the swings. It doesn't matter what happened during the day. Look, we're getting in the last several minutes of the day. And then this came, it was a little bit extended. Even if we went out longer term from 103, so the ATR is 494, so 5. If we went to 1250 above this would be 115, and then we go out 6 weeks or 2 months. So this would be, we could go March 120s. Looking at this, because it's a little bit extended, it looks like a good setup. But then look what happened. We pulled back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 2 weeks. 2 weeks it went to our target, but we were buying it at 103. We went 17 points out of the money and then went out a bunch in time. And you don't have to worry about this sort of stuff. Here, if it tagged below the prints, be like, that might be a bit much. And we could be a little more conservative here, because if we did get in at these points, then this will be a longer term swing trade setup. You might be taking some profit a little bit off the table from these ones, depending on what your strategy is. If you've gone out a longer time frame, because if it's $6 here, the ATR, and you're looking for a 20-point move, well, 2.5 times. Oh, this is 5, so $12. If you're looking for $12 here, then you're looking for 97. Then you're looking for up here. But you're giving it lots of time to fart around and stuff. And so if this is happening, you don't really have to get rid of it. You can take some off the table. So they always say it's good for it's good to take profit when the market gives it to you, but at what point? It's like, it gave me $1. Take your profit. It's like, no, we need a plan. We need a plan for that. And that's because we're looking left. Right? This one here, that's a gap fill, but here definitely taking profit. Look. Even here, the top of this candle, because this opened and up thrusted right to a double top, or 1, 2, 3, right? And it's $1, 101.50, whatever the deal is. But looking at that, it's like there's something that you can take profit on, especially if you got in down here. Something on that, and then and then maybe keep a little bit, depending on the size of the prints, right? That's all. That's what matters. We had this consolidation for so long. So there's Baba. We're not too excited about that one at the moment. Close one of these. SMCI is up another $5. I can't believe this one. I'm not buying it right now, because if I buy it, it's going to reverse. We talked about this. This was brilliant, right? This is support now. So we got to come back and test 50. We're at 53. It can go. There's a gap to fill. There's no way I'm swinging this. What's the risk? Back to the print. 50, 49, or 47. Way extended. And plus, if we were in this and it gapped up like this to the 55, it's like, holy crap, we're taking our profit. Absolutely on that gap up, right? Because of this risk here to do that. If it was a gap and go, maybe. So if we look at it on the 5 minutes, what did it do today? Do not much. Oh, it just, oh yeah, see what it did? Is it 9:30? It gapped up, and then it hit 55, and sat from 55 to 52.50. $3 almost all day. There's your high, increasing volume, lower high, squishy candles, pulling back, and this is not tradable, right? You don't want to get into this mess. It's not even remote. It's not a 1 out of 10. It's not a 1 out of 5 setup. Let's see what else we have. FXI has been on the list. I'm not sure if China's getting a little exhausted. We can look. Oh my God, look at this. Yeah, this is the other one. Look, I knew there was something. 8.3 million on China. 35.34. Let's look at when did this happen? Look, it pulled back. So was there anything pre-market? No, just that 8 o'clock wick. 35.34, and back to support, up to the print, back. This is going to be a tough one to trade. I just want to see if do they have a dividend or something? It's sorry. They've got, no, it doesn't look like there's a dividend. But look how extended that is. We've got that high, we've got a gap. We haven't made a higher high. And this can pull back huge. So if we look at the daily for this one, February 18th, 8.4 million, 35.34. Oh, look at this. October 2nd, 6.9 million, 35.48. 14 cents higher. Is they're doing this again. So if this, who knows with this one? It could be one or the other. This could go higher. Very well could go higher. But we've got these gaps, 34.69. There's our retracement here. And then I would think this has to pull back and then go higher if it's going to go. Right? If we're looking at the waves, 1, 2, 3, we'd have to measure it out. Then we could have a 4 back to here. There's your recent trend and then breaking up. So we probably have to give this one another week or so. But this is really good. If you guys are learning, watch how it behaves around these prints, right? Because there's this one here, 30.57, there's a 13 million. And this one, look how long it took. Move down, then up to all of these prints, and then a 1, 2, 3 down, and then now it started moving up. Like, this is so manipulated. All the way from 29 to 33 is just millions and millions and millions. So the institutions are in it. So they might take a little bit of profit and then move it higher if they're going to do that. But there's our recent high up here. It's 37.50. So that's still $2.25 away. And so that looks all right. So, okay, so we've covered those things. Did you want to talk about anything else? Otherwise, the only other thing for swings is we look at the opportunities if we want to go long or short. And we could just go look for longs. Some people feel better just doing longs. And you want things that are up on the day, so the net change is positive. The price is above the prints. And so AAL got new prints, 1.5 million, 3 trades on Friday. And so this gives us 86 potential opportunities here. We can increase the size, and then we can look for a swing trade. So there's, not sure what that is, 33. CNK, Cinemark, they're on the list. What's this? I've never seen this stock before. I don't know what that is. Oh, look, this one's moving. It got a new one. What on earth is this? Engages in the motion picture exhibition business. As of February 2024, it operated 501 theaters with 5,700 screens in 42 states and 13 countries. So is the cinema back? Because look at this, millions and millions and millions at 29, 31. And so this is interesting to be able to capture that. But look, perfect trade setup. 1, 2, bullish engulfing, increasing volume, closing above the prints. Fantastic. If it doesn't meet our criteria, we just leave it alone. We want the trade to pick us. We're not chasing anything. You know, it's like we have a set of rules. When the trade, it'll just scream at you. Right? This is a screaming long to me. Look at that. That's absolute. We don't have to see any of this. I would risk it right there. Perfect. This was higher volume, and then we rejected it. 2850 level, closed above all of these prints. Game on. And where's your target? Next print. Major dollar levels, like 30. So this is 2850. You could do like 29, 30, whatever. But if we're trading this on the swing, then I would say the next print, 31. And there you have it. And this ATR is 81 cents. So what we would look at is if we were going to go out a little bit, $2.40, $2.50, maybe $3. And I don't even know if the options are any good. We can have a look. This is CNK. Let me look at CNK. See if the options are any good at all. It's here. We will go CNK. We're trading at 33. So, look at 10-cent spreads. Boo. Right? Open interest. There's not much. These have 51 volume today. Not that great. But the 34 calls are 5 cents. And out of the 132 open interest, there's been 1,500 contracts traded. So not too sure about that. And then, so that's February. Oh, and these only have March. These are quarterly contracts. So March 35. Yeah, these are 15-cent spreads. They're garbage. We don't want that. So if we're going to trade this, we trade the stock. Right? So there's that one. Cisco unchanged for the day. It's got some, it's above the prints, but it's unchanged. DoorDash is up a little bit. Dell, FCX, down on the day. It's above the print, but down on the day. We don't want that. GDX, just got off the list. Gold looks to be doing something. So here, lower volume. We're at 270.65, or the new prints. There's 267. We've got these here. I'll look left. Yeah, we could probably go to, this is consolidating a little bit. I don't like trading gold. I don't have the patience for it. You see them behave a little bit differently. You notice, and I'm not sure if you guys are aware of this, but you see how it's gappy, down, up, down, gap, 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 and then it's because some of these things, for example, BP is like that, British Petroleum, because they trade on other exchanges too. So it's not just, it might not just be ours, and plus this is linked to metals. So if we look at something like BP or TLT or something like that, because other exchanges and other trades that occur outside of our market hours affect the price of the stock, you can have things that are gappy, right? And the one thing you got to be careful with gold is it's still following the trend, right? You see it's following the trend, the 4 and the 8, but I don't like this boom, pull back, up, up, pull back, like these gaps. I've never done terribly. I've done well with gold a couple times, but not enough for me to say I actually enjoy trading it. Right? I don't have the patience for it. It's not my mindset to do so. But this is I find it just difficult to trade. But anyway, it was interesting that that one's on the list. And JetBlue, oh, it's a $7 stock and it's up 84 cents on the day. Look at that. There we go. Increasing volume, breaking above the prints. Now the problem here, its ATR is 50 cents, about that. Our risk getting in at the end of the day, this might go for the gap fill, is to retrace to the 4 or the 8. So 704 is our retracement risk. So this one at 763, we could lose 59.60 cents on that. This is actually looking pretty strong. Seasonality wise, this pulls back a little bit. This time of year. Anyway, we follow the prints. This was a drop off, right? So this was the bullish trend, which we don't have. So if this dropped down, this could be an A, B, C, or we can count it as a 1, 2, 3. This could be a 3. I don't like it at the moment. It would have, I don't really see a decent entry there. This one. Slightly higher volume. We want, yeah, this one just kind of snuck up on us. At what point would we actually go long on this? I don't, I would look for something else. But JetBlue looks okay. It's looks like it's finally moving. But look at it hold these prints back from May. That's crazy. In September. Those September and May. So that's neat, because with Moby, you don't have to do any of that work. The 10 largest prints are already there, and if you want to add extra ones, you just click on it. But to see that, because we get asked all the time, I get asked, it's like, how do you know when the, how long are the prints good for? It's like, well, they're good till they're not, because when this tanked, boom, right to the penny. These two together, within a penny of each other, from September, that's 4.2 million right here. So if we just ignored these levels, then the print is dead, right? You can put it on there. But the good thing is you can scroll back and see when they actually occurred, so you can get a feel for if they're buying or selling at that point. So here, would you short it on this day? No way. You have this big red candle, tested a 4 million print and closed above it? Nope. Next day, tested the print, closed above it. This is just support at the moment, right? I have the setup that I like, and I don't see it. So I would just steer away from it, because what I like trading, I want, like I mentioned, the trade to pick me. I figured out what I like to do, And I'm looking for those scenarios. And then if so like some of those ones like SMCI and stuff, I never took those trades, but I'm not chasing it now because if I have the FOMO and all of that, that's a me problem. It's not a market problem. The market's telling you what it's doing, and it doesn't care even if I exist or not. So if I'm going to do anything, that's my emotional roller coaster which has nothing to do with the market. So I've been humbled many times. You have that revenge trading sort of scenario and stuff. And no, I've learned my lesson. And sometimes it's a very expensive tuition. So we'll go Kraft Heinz. Let's see. They have earnings or anything? April 29th. They're hanging out. See, look at waning volume. This closed above the print. So that's support. But what we need to do is we need to see this get above here. It needs to make a new recent high and move up. And we'd have to see if there's more prints. 2907 or 2920, 30. Yeah, I don't know. That one's not that great. So you see the ones that actually leap out at us. Marvell is technology. And this one, oh, look at this, 940,000 today. 107.42. They have earnings in March. And so there's this. So we've got this here, lower high, higher low, bullish engulfing, increasing volume. This might work, except let's just zoom out a little bit. What's the overall trend? If we were to draw a line there, it's got this what do you call it? Retracement sort of pattern. This could be an A, B, C. Very much it could be. There's the gap fill and support. So Marvell, we could see if that actually works. So it's ATR. What? It's ATR. How much is the stock? Look at this. ATR $6, and it's $100 stock. So that's quite a bit. It can move 6-7% a day on that. Actually, when you think about it, that's not too bad. This looks like a little head and shoulders here. Shoulders, head, but it's got a gap. This is a little head and shoulders, right? Like that, it looks like. This is interesting. So it meets my criteria here. It's not above the 4 and the 8. Today we have virtually no volume. This would have been the day to swing it if we were going to do that as yesterday or on Friday. That'd be a great swing. So one of the features that I'm working on as well is to look exactly for these patterns. There's a couple things. It's going to look for some patterns like this. So when if we cross a print and we close above the 4 or the 8, or if we're closing above the 4 and the 8 for the first time, and there's a little bit of gap in between, that's a good entry point right here, right? Increasing volume at a print. That's fantastic. So if you could look at your list of possible swings and then see something like this, that would be great, because you could take that, or you could wait for something like this the next day, because we're gapping above all of this with the other prints. And so then here, if our ATR is $6, then we wind up going $12-15 out and go like 60 days. So 77, we'd look at 90, 92, and then potentially go out 20 trading days. So let's see how that would have worked. If we got this and went out 20 trading days to 92, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15, 16, 17, 18, 19, 20. Hit our target, 92, 93. Now, we might have lost some money if we didn't go out far enough, right? Because this, we'd have to do it with a spread. But 1, 2, look at all of these all the way to here. So from October 15th to October 31st, that's 16 days we lost for it to do virtually nothing. Right? That's the benefit really of selling the put spreads. Because if you see this, it's like, let's sell it below here and we'll go out 30 days, 45 days. Then you collected X number of dollars for your contract, and then it just whittles away. And since we're so far above it, you don't even have to close it out. It would just be worth 0 at the end at expiration, right? Because there's no chance really of it going from 113 or whatever to 72 overnight. I mean, anything's possible. There's a difference between possible and probable. So anyway, there you have it. Okay, well, I'm going to let you guys go, I think. We've been working on finding some swing trades. We've had some great discussions about options and prints and seeing how the market behaves. Oh, and Leslie, yeah, thank you. I enjoyed hanging out with you guys. I'm glad you guys are asking questions and things. If you want me to come back, just tell Taz. Just like, hey, we want Dave to come back. and I'll do that. I'll pop in and share some things. And maybe Taz will let me share some things in the room. Maybe we can have more of a working relationship together. But I enjoyed... Oh, Shantha, hey, how are you? We could do a regular feature in the room, and I'm sure Taz won't mind. We can come in and do like a half-hour session or a 1-hour session, and because I'm not just coming in to brag about Moby because I made it. We're just talking about trading and helping you guys be profitable. And I think that the decision making just out loud and hearing about how somebody else plans the trade is quite helpful, like the reasoning part of it. So yeah, I figured it was a great 2 days hanging out with you guys. So I'll talk to Taz about doing a regular schedule, because I think I'm not sure if he's not in Mondays or something. So one of the days, if he's not in Monday, maybe I could cover for him and we could hang out together and stuff. Yeah, so Shantha, it is recorded. Oh, he's not in Mondays or Fridays. Okay. So it's recorded. The morning session is recorded. This one's recorded. And then the one that we did last Thursday, that's also recorded. And that's on the Moby site. I'll show you this. If we go... Oh, no, it's not there yet. If we go to the YouTube, like if you're here, I can ping the YouTube. I put the video in the chat. So if you click the video from this morning on the chat, if you click on that, you can just find the channel. And there's these ones from last week. There's the part 1 and part 2. So the first one was the momentum swing trade setups. That was an hour. And then the afternoon session, we discussed about swing trading. So what we talked about this morning in this morning's meeting was the follow-up for what we talked about on the last session on the Thursday afternoon, because we had discussed Apple and Intel and some other things, and so we discussed all of that. That was a bit of a follow-up there. And then what we did today was really a follow-up from Friday, but then we moved on and mapped out some trades this morning, and then the afternoons is more for swings. So yeah, I mean, if you guys want to mention it to Taz, and then I'll talk to him as well, and I would love to hang out with you guys. So anyway, okay, I'll give you back the rest of your day. It's already after 2, so it was it was great. Thanks for the questions and everything. And you can always hit me up if you have any questions or anything, or you want to talk trading. We can definitely do that. Okay. Well, have a great rest of your day, everyone.